But first, with the latest news from the markets and the QR National float, it's over to Jane Edwards.
At first blush, it seems a $15 million advertising blitz and a global roadshow hasn't turned the Queensland Government's rail and coal haulage business into a must-have investment opportunity when it debuts on the ASX tomorrow. Nonetheless, the vendors will pocket $4.6 billion.
The listing of QR National this Monday will be the second largest in Australia's history.
The float's backers managed to get QR National away at $2.55 per share, towards the bottom of the government's expectations. Retail investors who soaked up about a third of the shares on offer will get a 10-cent discount, while the Queensland Government is obliged to hold a 40% block for at least the next 2 years, a far larger overhang than it wanted.
It is a deal that's been done in the price range as forecast. It hasn't had to be repriced, it hasn't had to be pulled. It has defied the campaign that has been conducted in recent times because QR National of itself has stood in the marketplace and the value therefore is now real.
It will be up to the market to decide if he's right in the coming months. Looking offshore now, Wall Street ended slightly stronger on Friday after a volatile week, with worries about Chinese inflation, the impact of QE2 and the Irish debt crisis all causing the market to churn. The indices ended in the black, but it was far from convincing. The decision by China to raise its bank's reserve requirements caused more nerves for investors on Friday and led to a half-a-cent slide in the Aussie dollar. While across in Ireland, officials came closer to agreeing on a bailout package for Irish banks, which could be unveiled as early as tomorrow. World markets over the week were variable. The US was little changed. The UK and Australia were in the red, while Europe gained and Japan shot up by another 3%. Now, with our local share market news, here's Tom Elliot.
Well, as you just heard, the Australian share market really failed to fire this week. There was, however, still plenty of corporate activity about. First up, the board of AXA unanimously recommended AMP's revised bid of $6.43 a share, which was, of course, the same price that NAB bid just over a year ago. I think the AMP is going to win this one. Its shares were down over the week, but AXA as the target saw its stock climb considerably. Second, Telstra shares hit a record low around midweek after the company's competitor Vodafone announced a $45 all-you-can-eat plan, which really stunned the share market. However, the company's share price did rise later on after it said that its talks with the government over the NBN were progressing well. It also said that it felt the share market materially undervalued the business. Well, the board of Telstra would say this. There aren't many boards of listed companies that don't think the stock market properly understands them. Turning to banking, and Commonwealth Bank announced a record first quarter profit of $1.6 billion. The shares were up, but there is a real risk emerging here that the government may move to try and re-regulate the banking sector, which would not be good for future profits of the big banks. We'll have to see what happens there. Back to takeovers, and the shareholders of both AWB and Intel voted in favour of their respective bids. The Intel bid is somewhat ironic because, of course, the successful bidder is the Canada Pension Plan. It seems that Canadian companies can buy into Australian businesses, but of course, as BHP found, the reverse is not true, given its knockback over Potash Corp of Saskatchewan just a few weeks ago. And BHP's CEO Marius Kloppers came under fire at the company's AGM when it was revealed he has spent over $800 million on 3 failed bids. Winner of the week is Qudeco, again up another 17% after more positive drilling results began to percolate their way through the market. The loser of the week, however, is Mount Gibson, which saw its shares fall 15% after a boardroom coup that saw Chinese interests take control of the company.